You can use the line chart to check the longer time frame trend, whether it is a bullish trend or bearish trend. Once you have identified the longer time frame chart using the line,
Hello friends, welcome back to my YouTube channel IPAT. Today we are going to discuss about what are charts in trading and the two most widely used chart types, that is line chart and candlestick chart. Trading chart represents the information of the price movement with respect to time. Trading chart help us to decide when to enter or exit from the trade. There are many types of trading charts, such as bar chart, point and figure chart, Renko chart, line chart, candlestick chart, and much more. Out of all these charts, we will discuss about the two most widely used charts, that is line chart and candlestick chart. And we will also discuss how we can interpret the information shown by these charts to help us to make the trading decisions, where to enter, where to exit, or where to place the stop loss. Line chart represents only the close price information. To understand the line chart, let's look at one table of contents. This table represents the two data, that is date and the close price. So for each given day, what is the closing price of the instrument that it is showing with respect to this table. So we can see the close price on the 1st January is 70, on 2nd it is 120, on 3rd it is 18. So if we try to plot the line chart with respect to this information, it will look like this. On the 1st, close price is 70. After 2, it moves ahead to 120. Then on 3rd, it fall back to 80. Same, it goes to 150, fall back to 90, goes to 180, then 130, 160, 100 likewise. So this is the way the line charts are formed in the trading as well. So the last price or the close price is taken as the basis to generate the line charts. Overall, if we look at the line chart as a whole, it will look like this data points connection, that is the close price connection, as it is shown on the screen. On the other hand, candlestick charts are the representation of the four data, that is open, low, high, close. We called it as OHLC. As you can see on the screen, there are two types of candles. One is the green candle and one is the red candle. So for both of these candles, high and low remains the same. Just the difference is open and close. So for red candle, when market opens at higher, it makes a high and then it makes a low, but at the closing price it comes again and close somewhere in the middle. So this is the structure. And for green candle, market opens lower, then it makes the low, and then it goes till the high point, and during the closing time it again falls back to this point, and here it closes. Let's practice to plot the candlestick based on below data. I will pause the video for 10 seconds. If you try to plot the candle, it will look like this one. So open 200, then low is 100, high is 300 and close is 250. Since the close price is greater than the open price, so the color of candle will be green. Similarly, you can try to plot the candle based on the data. Now let's talk about the benefits of both of these chart types. So first, for the line chart, the main benefit is we can identify the longer time trend easily. As we can see on the chart, the longer time trend is up for this instrument. There are some disadvantages of using only line chart as well, like it is hard to make the trading decisions whether to buy or sell the instrument based on only one data, that is close price. There are a lot of benefits of using the candlestick charts. It shows the 4 data points, that is OHLC values. It also helps us to represent the data over any time frame, that is daily, weekly, monthly, like that one. Candlestick chart is very easy to understand. Most of the indicators work best with the candlestick, and there are algorithms which uses these data points, so we can code our strategy and build our algorithm trading. So the obvious question that comes to your mind may be, which chart type is best to use while trading, whether it is a line chart or candlestick chart. You can use the line chart to check the longer time frame trend, whether it is a bullish trend or bearish trend. Once you have identified the longer time frame chart using the line chart, then switch back to the candlestick chart and try to see whether you can use any of the 4 data points, that is OHLC, and you can find out the entry points to enter into the ongoing trend. Whether it will be a bullish, then you will buy, and if it is a bearish, then you will sell. So as per our knowledge, we can combine both of these charts, line charts and price candlestick chart, to form the trading decisions whether to buy the security or sell the security. So I hope you like this video. Please subscribe to my channel and enjoy the content. Thank you.